Sandip Sabharwal, it's a bit of a surprise for me to see that Nasdaq, which is ultimately a representative of tech stroke lose money stroke high P multiple stocks, that has made a 52-week that is at a 52-week high.
Yeah, so there are various reasons for it. Some of the large US technology companies have reported strong numbers and guided for strong performance, like Microsoft, etc. Secondly, the valuations of the technology sector in the US, especially those comprising large parts of the Nasdaq, are highly correlated to interest rate movements. And as the bond yields peaked out and started falling, we saw the valuations move up. So, and plus, as we come closer to a recession and slowdown, concerns peak out, that's the time some of the growth stocks will start performing, assuming that there'll be a growth revival going forward. I think these are the factors which are going on. And the dynamics for the Indian technology companies, unfortunately, are different, where it's more to do with the overall outsourcing story. So while many companies out there started to suffer early on, the Indian companies continue to do well and they are feeling the impact now. So I think there'll be a lagged impact on Indian technology companies.
Sandeep, we were discussing SBI versus ITC, that there was nothing wrong with the SBI numbers, it fell. There was nothing great about ITC numbers, but every brokerage who tracks ITC, they've upgraded their target. Do that comparison for us. Why did SBI fall? Does ITC deserve a re-rating?
So ITC re-rating has gone. See, the key thing you need to watch out there is, one, the valuations are still below most of the consumer companies. So now how much cigarette business valuation people want to give, that they have to decide. But uh, there's no case for a big downside from current levels, and I don't see a big upside in the near term also. But the dividend yield itself is so high, like 15.5 rupees on a 400 rupees stock is almost 4%, which is higher than the saving bank rate of the large banks. So I think that supports the ITC stock. SBI, of course, the kind of huge increase in operational costs plus the concerns related to the new norms RBI is coming out with and its impact on PSU banks is impacting uh, SBI and other PSU banks in the short term. Because what happens is that lesser write-offs, highest margins, high margin expansion, etc., will help you at a time when current times when operating expenses went up so much, it could shield that. But as growth slows down and as margins also peak out, high operating cost increases will lead to reduced profitability increases. So I think that's the concern which some of the market participants would have had.
AMC stocks, how they've done in last 1 year, SIPs are going higher. Indians are saving more in financial assets, but all the AMC stocks, I mean HDFC AMC was at 4,000. Now it's at 1,810. Birla AMC is nowhere close to its issue price. UTI AMC, which has been on the block where the Birlas have bid and the Tatas have bid, and finally government has not taken any kind of a decision yet. But that's Aditya Birla Sun Life, and that's UTI AMC. For you, all of them are down 24-25%. Sandeep, the cat is out of the bag. We know which way things for the AMC industry will move now. SEBI, in a sense, has pretty much given us a indication of how the profitability in the TR would move. Stocks are down 25 to 40%. Is it a good time to buy into them? Because you're now buying them at the peak of pessimism and the peak of bad news.
So I think the main issue AMC stocks companies have been facing has been the continued reduction in overall expense ratios allowed, as well as uh, a degree of non-performance from large established players which are listed, and which has shifted market share away from them to some of the other smaller players or to alternative investments and even direct investment into equity. So I think that's where the big concern around AMCs is. And a lot of people, because of this underperformance, are moving to index funds, whereas it is the the amount you can earn out of the management fees is very, very low. So the only thing is that as if SEBI comes out with some norms on performance related fees for performance, that could help drive up overall performance of AMCs as they focus on performance and then also shareholder return. So, but we need to see the contours of that.
Kunal, just let's discuss what's been going on with those real estate stocks because, after that one day pop, we saw the terrific run up. Third straight day on the chart that these stocks are cracking.
But the likes of DLF is not cracking as such. I think that stock is down 10-15 rupees only. Oberoi Realty is. Yeah, Oberoi Realty is cracked. So the components within the sector holds the significance that whether this is just a short-lived up move or whether this move, even if it's a corrective move, that post correction there is a higher probability as well as chance that the index can make a strong comeback. And the larger stocks which have been strong performers, they are still holding their fort. The likes of Sobha, Kolte Patil, many of these other stocks which were high flyers in the last 1.5 odd month, which has been sporadic volumes for themselves. These stocks are correcting sharply. The likes of DLF apparently is not correcting as sharply as compared to the other peers. So Anantraj Industries, if I'm not wrong, yesterday made a high of 150 plus mark itself, on a day where the real estate index was actually going to a correction. So it's not all components within the real estate stocks which are going through a correction. I think that's a good sign that this could just be a very stock specific correction within the entire real estate pack. Post maybe a couple of more weeks of consolidation, I would believe that these stocks should make a strong up move back again. Would be extremely bullish on the likes of DLF, Anantraj from a short to medium term.
Okay, so that's about some of the real estate stocks, but there are big changes which have been announced by Chris Wood in his Greed and Fear portfolio as well, because he's increased the India weightage by 1%, and it's reduced Thailand by 1%. But internally speaking, they have introduced Thermax as well as Axis Bank into their long-only portfolio with a weightage of 5 as well as 6% respectively. They've removed investments in ICICI Lombard General Insurance as well as Maruti Suzuki India. They've reduced the weightage in HDFC Life by 1% when it comes to the long-only portfolio. And if you look at the Asia ex-Japan long-only portfolio, they have added the weightage on L&T by 1 percentage point. So, Sandip, there seems to be a clear tilt happening even when it comes to the FII flows with respect to the capital goods space. Case in point here, Thermax being introduced with the 5% weightage, increase in L&T weightage by 1% as well. Which are the stocks that stand out to you in this particular segment, given the fact all of these stocks have run up considerably?
Most of the companies are doing well, but I think your second comment is more important, that the stocks have run up a lot. So where the valuations are still reasonable is something people need to see. So most of the larger companies, be it starting from ABB, Siemens to the next leg, Thermax, Elecon Engineering, etc., to coming down to LA, and the largest player, which is more infra construction per capital goods, L&T, all are doing well. It's a question of valuations now, because stocks have run up so much that we need to wait for either consolidation or some correction to add on to them. For whoever is owning them, I think there's no reason to sell.
Couple of numbers here, and one company which has disappointed again and again is actually United Spirits. Margins are down from 17% to 13%. PAT is down from, PAT is flat, EBITDA is down, but margins are also down. Sandeep, this company amazes me. There's no linearity. I mean, we can say that Indians are consuming more alcohol. We can talk about the fact that that's the way how the migration of a society has happened. That is how the wealth effect would kick in. But the volatility in United Spirits numbers has been extreme.
Yeah, it's been very all around the place. But I think there are two things. One, the results are much better actually than expectations, because expectations were very low given the management guidance, etc., on costs, etc., which came out at the end of last quarter. So operating profits actually 337 crores versus around, I think, 290 odd crores, which the analysts are expecting. So reported result vis-a-vis expectations are better. Now, that said, the strategy of the management, where they removed most of their high volume brands, low cost brands to just focus on the premium side was a wrong one in my view, which happened when the new CEO took over. And that it's because in a country like India, you can't move away from value. And those brands are actually big brands for them. So I think that's a bigger issue of strategy, which shareholders of United States need to be more concerned on. And the reported numbers are actually not bad.
Okay, in the meantime, Naresh, your take as far as Gland Pharma is concerned, that stock has been on a one-way downturn from the levels of 4,000 plus. It's down to 1,300. And today the numbers are again very, very weak, sharp decline in profitability. The margins have eroded. What should one do? Book their losses, or there's some case for bottom fishing here?
So the case for a lot of these pharma names is we've just seen one-day recoveries and again it fizzles out. So Gland Pharma on a single day went up 15-20%, back from 1250 to 1450, and then just faded off over the next 3 weeks. So this is just still an indication that the bottom is not in place. So does not make sense to do any bottom fishing. It's just spent 3 months around that 1200 mark. So for now, it needs more time and more price consolidation before it bottoms out. So too early to call a bottom, so no bottom fishing here. And even the best of the pharma names which saw a recovery have not been able to hold on. So Sun Pharma or Dr. Reddy have also fizzled out. So overall, the space, the pharma space still remains tricky. And names which have fallen 50-60% are still very tricky. So Gland Pharma would still be an avoid.
Tata Elxsi, and they've also come out with numbers. PAT marginally up, revenue marginally up, margins marginally down. Why am I bringing up Tata Elxsi? It was at 10,000. P multiple just went out of whack. It's got a low equity base. And it's got a low equity base. It's a Tata Group company. Tata Group stocks went crazy in 2021, 2022. So it had everything going for itself. The business was growing in the technology space, a Tata Group company, and low float, and the stock just went berserk. P multiple went to some 70, 80 times. It's down from 10,000 to about 7,000. But I think based on these numbers, the stock may just face some more music. But the company which I want to discuss with Sandip, and maybe he has something which we'll discuss, is it a good time to buy, is Bata. Profits are marginally up. EBITDA is marginally lower. Now, nobody was expecting good numbers from Bata, Sandeep, considering that raw material pressures were at its peak. If the stock falls today closer to 1400, 1450, would you be buying it?
Because again, our results are better than expectations, both in terms of sales, where they are up, I think 3-4% more than expectations, and profits, which are around operating profits are nearly 10-12% above expectations, and reported profits are around 15% above expectations. So I think the impact which many of the footwear companies and also Bata took because of the excise duty hike and general slowdown in consumer demand, that seems to be reversing. And raw material price pressure, I think, peaked out, and from here on, we could actually see further improvement in operating profits. So I don't expect actually the stock to fall. And this is a stock which we have been actually buying as a disclosure over the last 2-3 months. And I would remain positively inclined.
Naresh, some breakout shares. Nazara Tech, that was a mover in yesterday's trading session on the upside. And you also had something like an Indigo Paints that was active. What's your view? What's the chart reading like?
So Nazara Tech is interesting for the fact that the stock has gone through a 1 year of consolidation. A little too early to call a bottom, but at least the consolidation is in place. So if you look at the price, the stock made a bottom around 450 to 500 back in June of last year, as well as in May of last year. And we are in May of this year, we've made a bottom around that 450, 500 mark. 630, 640 is a major resistance. Once that crosses, that would be the first indication a bottom is in place. But seems like signs of bottoming out here, 1 year of consolidation. So the stock would be on radar once it crosses 630 levels. For now, it is a little too early. Indigo Paints, on the other hand, has seen a sharpish move over the last 2 months, up from sub 1000 levels to 1400. Still, the longer term trend is weak. The risk rewards are not great because it went to a one-way fall even in the last 6 months went from 1700 down to 1000 rupees. So out here, I'll be a little careful, but would be looking out for Nazara Tech, and we are seeing this happen in a lot of new age tech companies which went down 50%. Have gone through a 1 year consolidation. Nazara Tech also fits into it. So waiting for a close above 630 to confirm a trend change.
Okay, so that's